let's get to the market action first. The Nifty opened lower today and traded lower to around 10,250. The index saw a sharp bounce from the level to reclaim the 10,300 mark. Sensex ended with cuts of about 450 points. Bank saw a sharp pullback rally to end above the 25,000 mark. Mid-cap saw wild swings, but that index still closed with cuts of more than 1.5%. Anuj Singhal joins in now with the key highlights. Anuj, bulls can be relieved though that recent lows were protected.
Well, big decline for the market, but the recent lows were protected. Reliance was a problem today along with IT names and a couple of other heavies. Mid-caps were also lower, but the Bank Nifty did recover towards the end and finally was down only about 100 points. Reliance, as I said, was a problem. HDFC was down and Infosys as well dragged the market. So these three stocks dragged the index the most. Other index losers today included Indiabulls Housing, which was down about 17%, Yes Bank, IT stocks like HCL Tech and Tech Mahindra. Tata Motors was down. On the gaining side, you had names like HPCL, Sun Pharma and Kotak. In the F&O space, there were some large losers like Mindtree post the numbers, Piramal Enterprises, Shrey Infra, DHFL, Repco Home, ACC after the numbers, and Dish TV as well was down quite a bit. While on the gaining side, you had DLF, Jubilant Foodworks and Reliance Infra. So let's see. Today was bad, down but not out. 10,150 is still the level that we're watching out for. The recent low, if that's defended or not. Next week is expiry week as well. So promises to be an interesting one.
Okay, Anuj, thanks for that. So bulls down but not out. But in the currency market, the rupee opened the day flat at 73.62 to the dollar, but has gained 13 paise since then and is currently at the 73.46 mark. A fall in crude prices over the past week, coupled with overall weakness in the greenback, has given a boost to the rupee, right now at 73.46. Let's take a look at crude as well then. Prices have inched up today after taking a beating in the previous session on account of a build-up in US oil inventories. Currently, Brent crude is at $79.5 a barrel, while WTI NYMEX is inching closer to the $69 per barrel mark at 69.15. In Delhi and Mumbai, petrol prices have been cut by 24 paise to 82.38 and 87.84 rupees per litre respectively. Diesel in the two cities has been cut by 10 and 11 paise each. So fuel prices, they're tempering a bit. But let's talk about the big sector that was in focus in today's trade. In a bid to arrest the sell-off in NBFCs, the RBI has moved to boost liquidity. Banks have been incentivized to lend to NBFCs and housing finance companies by relaxing the liquidity coverage ratio norms. In a notification, the central bank has raised the single borrower exposure limit for NBFCs which do not finance infrastructure from 10% to 15% and is effective up till the 31st of December. However, despite this move, shares of housing finance companies have fallen sharply in trade as the single borrower limit has been raised only for NBFC. So Indiabulls saw the worst cut down by 17%, LIC and Groove Finance down by about 2 to 6%. Lata Venkatesh is here to help us understand why. Lata.
I'll first explain the complicated good news because of the way in which the rules are structured. Now, under RBI rules, 20% of a bank's deposits should be invested in government securities. A further 8 to 9% have to be invested in what they call high-quality government bonds. Bonds that can be easily sold, like 10-year paper. Whereas in the SLR, you can even have state bonds and things which are not very liquid. A part of the bonds that you hold as SLR can be counted for LCR, that is high-quality liquid bonds as well. What RBI has said today is that if you incrementally lend to NBFCs and HFCs, to the extent you lend, that amount of government bonds, even if they are not very liquid, they will be counted as high-quality liquid assets for LCR. So for banks that are dying to get high-quality bonds and therefore have to take money away from lending to the private sector, this is a boon. But, it's not, it looks like it's not a great deal. Now, I just want to say the other rule that RBI came with is that single borrower limit, there's a limit to which any bank can lend to one single borrower. For an NBFC, non-infra NBFC, it has been raised from 10 to 15%. Now, the impact of this is that, first of all, since it's non-infra NBFCs, it's the likes of HDFC and, or more importantly, L&T Finance, Chola, etc., which are advantaged. If at all banks want to increase lending, they are very likely to look at the asset quality. and therefore a company, a housing finance company like HDFC could be advantaged. Now, Credit Suisse has made a calculation that banks have actually raised their lending to NBFCs by 40% year on year from last August to this August. I further looked at the numbers. Actually, this 40% growth had come earlier itself, by April. From April to August, actually, they have not lent additional money. So it appears that banks are already of the impression that they're overexposed to NBFCs. Now, we spoke to several bankers, and they're very clear that, yes, we will use the rule, but we will do, we will do a great deal of due diligence on the quality of assets we pick up. Now, the last point that I want to say is that the RBI has raised the single borrower limit for NBFCs. It has not included HFCs over there. That has also raised eyebrows. Is RBI worried about the asset quality of HFCs, which is why it has not included them in the single borrower limit? That also is working against the housing finance company stocks.
Okay, Lata, very well explained. Thanks for joining in with that. Let's move on to an exclusive now. The race for Essar Steel is in its final lap. Lenders of the company are in a meeting as we speak and deliberating bids. We learned from sources that the field has now been narrowed to just two contenders, Vedanta and ArcelorMittal, with New Metal out of the race over non-payment of dues. Ritu Singh has been tracking that story and she's here with the details. Ritu, take us through this final stretch now. What are the possibilities and by when are we expecting to know who could be the front runner?
Well, as you say, the race to acquire Essar Steel has narrowed down, and yes, there are only two players in the fray now, which is ArcelorMittal and Vedanta Group. Now, do remember, on account of non-repayment of dues of Essar Group companies, New Metal Consortium has become ineligible as per the Supreme Court order dated October 4th, where they had given 2 weeks to both New Metal and ArcelorMittal to repay the lenders all the dues of delinquent subsidiaries if they wanted to stay eligible. ArcelorMittal, on the other hand, as we had reported on Wednesday, made a repayment of around 7,500 crore rupees to the lenders of KSS Petron and Uttam Galva and has now received a no-due certificate, thereby making it eligible to remain in the race for Essar Steel. Important to note is that as per the Supreme Court order, no fresh bids can be invited, which rules out any new bids coming in either from JSW Group or even VTB for that matter. So now, the resubmission of plans will happen as per the second round of bids, which was placed on the 2nd of April, which means ArcelorMittal will get to place the same bid that it had placed on the 2nd of April, even though later it had offered to revise its bid for the company to 42,000 crore rupees. That will not be considered. Only what was placed in April will be considered. The same story is with Vedanta as well. But yes, bankers do believe that Arcelor's bid is higher, and that will be examined in today's Committee of Creditors meeting, which is currently underway.
All right, Ritu, thanks for joining in with that. Now, 6 months ago, on 27th April, technology firm Vakrangi informed exchanges that PricewaterhouseCoopers has resigned as auditors of the company. Now, PwC has later cited irregularities in the company's accounts. The stock has fallen by over 70% since then, but none of the stakeholders have raised any red flags or even questioned the promoters over PwC's exit. CNBC TV 18's Sonal Sachdev has been studying Vakrangi's stupendous growth and where it is coming from. Sonal, what's the analysis?
Yes, we've been taking a look at this, me along with Jyotindra Dubey, our colleague at Vakrangi, and we've learned from sources that a significant portion or a majority of their revenues come from trading in gold. This is not one of the reported segments. Pricewaterhouse, which was the earlier auditor, had indicated in its resignation letter that there were dealings in gold and jewelry, and they had questioned the management about it. But the management failed to provide satisfactory answers, which is why PwC decided to step down. I'll quote from the PwC statement. They said that these financial statements as a whole are free from material misstatement is something the auditors need to claim, and they were not able to state whether the statements were free from fraud or error, and that they presented a true picture. Now, some of the numbers that raised a red flag: stupendous growth in revenues to about 5,800 crore from about 2,500 crore year on year. 10,000 Kendras added in just 1 year. Vakrangi Kendras, the major source of income, 10,000 Kendras added in a year. And if you try and use the numbers that the company has indicated, a gold franchisee of Vakrangi targets a revenue of 2 lakh a month. If we add that up, 10,000 Kendras 2 lakh a month, 2,400 crore a year. That's still about 1,000 crore short of what the company has achieved. What's also interesting is that the working capital numbers don't seem to make sense given the companies in the services business. About 74 to 75 days of receivables, just 20 days of payables. Also, material purchases extremely high and disproportionate for a company that seems to be doing e-commerce activity in alliance with players like Amazon. This raises some big questions. One is A, why was the dealing in gold not disclosed? B, is trading in gold mentioned in the memorandum of association of the company? And C, LIC is a stakeholder and they have a nominee on the board. Why didn't LIC raise any questions about this? We are waiting responses from the company, the new auditor, as well as LIC.
Right, thanks for that analysis, Sonal. Some important questions being raised over there, and of course, we will be tracking this story in the days to come. Quick break. On the other side, IT stocks slumped in today's trade after reports said that US is planning stringent norms for granting H-1B visas. More details after this very short break.